So it's Monday the 24th of March and we are heading into the US Open. It's been a quite calm, peaceful weekend in cryptocurrencies and in the markets. And then this morning, we have seen a pretty nice rally on a story in the Wall Street Journal that the Trump team are exploring a simplified plan to for reciprocal tariffs rather than the really punitive cross-the-board tariffs that the market were worrying about, and that has caused quite a decent rally. I'm not sure how many times this tariff trick is going to work, where Trump, announces really punitive moves and then rolls them back. Eventually, we would like to think that the market would stop listening to them. So that's where we are with the Trump tariffs. And then the other thing he did, which boosted crypto this morning, was, of course, a pump on Trump on Truth Social of his TrumpCoin. I just want to remind everybody that in this official TrumpCoin in 24 days, so at the moment only 20% of the coins are unlocked, all of the rest are locked up, and the next tranche to be released is in 24 days on the 18th of April. So obviously with the price down in the toilet, which it has been, I think that the market, he's going to try and pump it. When I look at this Trump coin, whenever I'm looking at corrections, I'm always looking for three waves and a zigzag move, or 50% of the previous swing. So I would say if I was looking at this previous swing here on this deck screener, that would be 1376. That's therefore going to be that kind of 50% resistance for me around 1376. And if we're going to make two equal swings higher from here, from this low to high, from here, that takes us also up to that mid 13. So if you're buying some speculatively or looking at this, or you've got some and you're looking for this bounce, that's going to be quite important resistance ahead of that release date on the 18th of April. And I think they will try and pump it, and so maybe it is worth a little bit of a speculation, but just make sure you sell ahead of everybody else. The story of that's really basically the story of these coins, isn't it? So let's talk about where we are in Bitcoin. Let's start with the big weekly chart. I'm going to tidy up my chart here. I've got quite a lot of moving averages on here. We'll leave them on. And let's talk about this whole swing, where we have on each little 5-wave swing, we've done really decent 50% retraces. And from the 5-wave swing from the Monday, the 5th of August low, we've done potentially 5 waves up here. And so we could say from this low that we've completed 5 waves and this whole rally is complete. However, whilst we hold this 50% back, we really kind of have to say that we are still trending higher and following the pattern within this. There is also a phenomena across crypto, because they kind of start really slowly and quietly, and then they build into very parabolic moves, particularly newer altcoins. As Bitcoin becomes more mature, I think that I keep thinking maybe that's less so, or less likely to happen. But it's also possible that this 5 waves up, what we have seen is really explosive, much bigger 5th waves than other waves. And that could be what we're setting up here in Bitcoin. And so whilst, if this is just wave 1 of 5 that we have done, rather than a completed wave 5, then 50% or 61 back is a very common retrace of Bitcoin. And it is possible that this is just wave 1, wave 2, and we're going to do another big explosive wave 3 of 5 higher from here. The other thing is in 5th wave. So, as I've explained before, normally in a trending market, you don't tend to overlap in the 5 waves. But sometimes in a leading diagonal 1st wave and in an ending diagonal 5th wave, those trendy moves tend to get choppy and overlap. So in a 5th wave, you can see something like this. and the waves overlap, and that tells you usually that that is a fifth wave that you're looking at. So whilst at the moment we say, oh well, it's really important trend support and we can't come back more than this 50%, the most common retrace when you see these overlapping waves in a ending diagonal fifth wave is a 786 fib retrace. That means from this low to this high, the most common retrace is a 786. So it is entirely possible here that we can see quite a strong rally and another leg lower, and we could come back to 786 from this low to high like this, which would put us down here at 62,000, and we could pull back to this 786 fib retrace level and still make new highs and a really strong third wave of this fifth wave higher from here. So for me, that 62,000 becomes a really important support and resistance level. If we go left, like 62,000 is quite an interesting level. If we go all the way back left here, first support when we pull back, high back in March 2021. But it's not just 62,000 a really interesting level for that reason. But if I come all the way back to this whole swing here, in other words, you know, all the way up, we've done these 50% retrace things within each swing. This is a 50% all the way back from this October 2022 low. So there's quite a lot of confluence at this 62,000. So, you know, at the moment, everybody's like, oh, phew, the tariffs are going to be all right. Everything's okay. But if the shit hits the fan and we make a lower high here, and if you wanted to have a kind of crazy bid, like, or, you know, we could come all the way back to 62,000 in Bitcoin and still make explosive new highs in this big swing from this low. So that's how crypto corrections work. And I just wanted to point that out. The other thing about these 50% patterns is they tend to mean revert. So 62,000, if we, you know, roll over and hell breaks loose, that's where we're going. Let's tidy up this chart again. So the other thing to say about these corrective patterns, so we know from this swing low to high, we are bouncing from a 50% retrace level, and we know that if we get above the 38.2 on a back test, we are going to rally 50% of this whole drop. So if we can hold above 86,381, which is this back test of this kind of 38.2 level here, then we're going to do 50% of this high to low. So I'm going to go down one time frame to the daily because we are holding above this level at the moment. See if we can continue to do it for a couple of days. 50% back then is 93,000 on the upside. Now I think we're going there for a number of reasons. So I'll talk about why. 93,000 then, if we can break higher here, hold these highs, then that's where we're going. It's possible because it looks like we're in very choppy corrective moves here. One thing I really don't like, or the market doesn't like, is really strong moves on Monday ahead of the US Open. It's like US traders want to kind of pull it back so that they get to play as well. And I think if that happens here, then it could be a little bit of a buying opportunity. In other words, these three-wave corrections turn into something bigger. So at the moment, that would mean we would see something like 3 waves up like this, 3 waves back, and then, you know, a final leg higher here. I wouldn't rule that out. At the moment, all we've done is retest the highs from Thursday. And yeah, if we hold above Thursday's highs, that's where we're going. 93,000, really interesting kind of level as well. If we go left, you know, how many times we've dipped back into there. So that's how I'm looking at this chart. The other reason, so as you know, I'm a big zigzagger, so I'm always looking for 3-wave corrections when they're over, because 3-wave corrections are usually corrective. So if you trade them finishing and reversing, you are trading with a trend, and your trade tends to go further or work better if you trade with a trend. Now, normally, you know, in a downtrend, we would look for, you know, 3 waves back and we continue lower. Sometimes though, in a really volatile market, they'll look sideways like this, and then you continue lower, and sometimes they will look something like this, so it'll call a running flat correction, and you continue lower. And you know that you've done this, you know, whenever you're looking at corrections, so you see the first swing and the middle swing, the B leg, they have to be 3 waves as well in the middle. Sorry about my dog snoring, please don't leave comments. One of the ways you know is these 2 swings are usually equal. So if we apply that theory here to Bitcoin, if this is actually 1, 2, 3, and we're going to continue lower, we would expect these swings to have a fib relationship with each other. In other words, one would be either 61.8 or equal, or 1.618 of this one. So if we're going to do that here, I measure from this low to this high. From here, you can see we're sideways at this 61.8 level. And that means that if we break and hold above this level, as we said, and it's actually at 87,116 if we measure it in kind of fib terms, which is where the high was last week, if we can hold above 87,000, then the equal level, where these 2 swings are equal, no surprise, 93,500, 93,000 and change was what we said would be the 50% retrace from this high to this low. Let's put it on, and you can see then where our little reversal zone here. So between 96,881 and 96,881 93,000 and 93,500 is 50% from this high to low, and that equal measured move level, which is absolutely my favorite reversal setup, bar none. So if we squeeze higher this week and you're looking for a level to reload shorts, that's going to be it. And if we get above it, look for it to be support, and we keep squeezing higher, and then that big round number 100,000 and maybe 103,000 comes into play, and then, you know, we can start looking for a shallow pullback and continue higher. So that's how I'm seeing Bitcoin at the moment. And I think to start the week, because we've already made such a strong move already, and we really don't have any details, let's face it, on these tariffs. We could see a little bit of a pullback into these daily moving averages here. I think it's a buy if we can hold above 87,000, and we're going to look for 93,500, 93,000 to 93,500 next. So yeah, quite promising. Now, if we can't get above this, this is really resistance. If we can't get above it, I'm afraid we're still going lower, and you know, if the lows don't hold down here at 76, 78,000, you know, we could see really, if something happens, something kicks off, we could still see that bigger 62,000 level come into play. And, you know, if we did it as a Gartley pattern, let's talk about the levels. It really is important that we go level to level to level here, because, okay, let's get it down here. These fib levels and this sequence have been really important for Bitcoin. It could be that we come down and we make one of those really big Gartley patterns. So what's a Gartley pattern? Well, a Gartley pattern, you usually make a pattern like, let me draw it. So you come down to a 61.8 and you'll bounce, either a shallow bounce or a bigger bounce, and then you do another leg lower to the 786. So, you know, for me, you know, really the fib levels, I look at them level to level to level. If we can hold above this 86, 87 resistance, we could squeeze a lot higher, 93,500 potentially, 50% of this whole drop. But if we go lower, I still think that we have really nice big tradable bounces to come before this is all over. So that's where we are with Bitcoin. You've got to learn, unfortunately, as this market matures, which Bitcoin is doing, and I would argue probably ETH as well, it gets harder. You can't just buy anything and wait for it to go. You kind of have to learn to ride the waves, unfortunately. But as we do it more and more, we learn better and better, right? Now, one thing that Bitcoin to keep an eye on today is for when stuff bottoms is it's really correlated with the NASDAQ at the moment. If I look at the NASDAQ in the gap higher, and if we measure the 236 fib, even from this high to low and this 20,000 level, we've broken above it. So if the market decides to pull back here and look, we're going to look for this 20,000 level to hold as support in the NASDAQ for more upside. And pretty similarly, I think in stock indexes as well, that could also give us the pullback that a lot of people have been waiting for to buy and reload in gold. The level I'm looking for it to pull back to is around 2,980 in gold to buy for the next swing higher. And so that's kind of how the markets are to start today. Let's talk about some of the others, because seasonally, usually in the second quarter, which we will start next week on the beginning of April, Ethereum and the altcoins tend to do better in the second quarter historically. Not doesn't mean guaranteed. So we'll look at some of them, and let's look at Microstrategy, which is also massively outperforming. Now here in, let's take my squiggles, which is what I was looking for in Microstrategy. So for me, Microstrategy has made a pretty textbook measured move correction here from this high. So if I measure from this high to low, this swing was to 61.8. We double bottomed, really nice sign of a bottom, and bounced from the daily 200 moving average, and we were looking for it to break out. You know, when you double bottom, you have to break the high in the middle, the double top, and we could have a little bit of a pullback here. You also, when you make an equal measured move like this, and this second swing is 61.8, one of the key signs that you've reversed and holding above is holding above the 236 fib on a close, which we haven't been able to do really. I mean, get above it and find support from it and hold above it. So at the moment in the pre-market, we're trading at 317, 305. I keep saying this level, 305. If we break up higher here, I'd really like to see this hold as support to assure me that we're going higher. And because we've done this double bottom move, I would look for twice this distance. And again, that big 50% level here in the middle would be my first target in MicroStrategy at 387. And of course, there was all this news that he has bought some more Bitcoin using proceeds from the sale of some common stock. And he's also got this scheme he's launched where he wants to attract money from treasuries into his Bitcoin bonds. Let's see how that goes. I forgot to mention this week there's also another eclipse, then we get our eclipse season out of the way. So the second eclipse this week's on Thursday. If we're going to see a big turn or hell, let's see what happens on Thursday. Just watch out for that. Month end can be quite funky, remember. So holding above 305 in MicroStrategy, we're looking for upside. 307 next, maybe 424. We're going to go level to level to level. 350 might be a little bit of a wobble level in the middle. And that's how I'm seeing MicroStrategy. Let's talk about Ethereum and whether we're going to see ETH outperform and the bigger patterns that we are looking for in ETH. Now, big picture, let's look at this on the weekly. We have lost this weekly 200 moving average, which really, you know, was support, and when we got underneath it, it was resistance. You can see all the way back from 2022. When I look at this bounce that we're setting up from this 61.8 fib level, then the key trend resistance and target for longs is 2,434. That is this 50% level midpoint in the middle. And if we go all the way left, look, it's kind of really important support and resistance. It was support when we tried it in January 2022. It was resistance here, and it's kind of one of those middle level pivots. So 2,434, if we can get a decent bounce going in ETH is where we are looking for. If we cannot hold above this previous high and hold above this daily 20 moving average, unfortunately, we're not really going anywhere. But for me, I I'm starting to think that I can maybe I'm seeing things as maybe I can see 5 waves off the low here, which means that 3 waves back, and that doesn't take out the previous swing low, could be really interesting buy around this month end for ETH for more upside. And when you consider that we're at 2,000 at the moment, 2,434 is quite a nice trade. And if we do that bigger kind of golden ratio zone thing, which means you bounce from the 61.8 to the 38.2 with this 50% in the middle being a little bit of a pivot level, our second upside target is 3,000 and we're at 2,000. So that's, 50% gain from here if we can do that in ETH. Now, when you're not sure, to be absolutely sure, if I put my fibs on from this low to high, we could say this 236 fib level here in the middle, 2,300 might be a little bit of a wobble. But I think I'm going to lean on these bigger fib levels and say, because we've seen such really nice reactions from them each time we've tagged them first time, I'm going to lean on them and look for the bigger bounces in ETH. So what about short-term entries today? Well, again, we've seen a really explosive move ahead of the US Open. 3-wave pullbacks, especially like 3-wave pullbacks like here. We had little shallow pullbacks, and then we had a lovely 3-wave back overnight, and then early this morning up we go on this tariff relief news. There in the altcoins there are quite a lot of really interesting setups. So I will talk about requested coins first. Let's find them. So Ripple, first off, as I said last week, Ripple's kind of one of my more favorite here because it's made really decent moves. Now, one thing Ripple did do last week is it paused at this correction. So we've gone A, B, C. Now, I think because of this overlappingness, I think that a pullback should be a buy, and we should continue higher to this equal measured move in the top of this triangle at 2.8, and we are right now in the middle with flat moving averages, which usually means, and it kind of has underperformed this morning compared to some of the others, and that means for me that we may see a bigger pullback here. So 1, 2, 3 before we go higher again. But if you keep buying the pullbacks, this should continue higher for me within this consolidating range to 2.8. I don't think this is the most ideal trade out there. Whenever your moving averages are all bunched up here in the middle, there really isn't a kind of trend, and I don't like diddling in the middle. I've said it before. But if you're holding some, then I would say the chart still looks pretty constructive, and I think that we continue higher to 2.8 next in Ripple. I wouldn't be shorting this, let's put it that way. Don't short a quiet market never short a quiet market is quite a good expression. There are a few charts that I'm interested in. Let's talk about some of them and seeing some really decent moves. This is XLM. So if I take all my fib measurements and stuff on this one, and I just look at it bare bones at what we've done here with this lovely pullback to the daily 200 moving average and the support that we have found from it now that we've got above it, we can say pretty clearly there's a pretty nice level through the middle here in this chart that if we get above it, and above this kind of daily 50 moving average, we should really fly. Ideally back to these highs, and ideally kind of, we could say fib retraces from this low to high. We can measure them that way. But holding above these moving averages usually sees quite a strong explosive move. And so I'm not going to say we've bottomed yet, but this is a really good place to do it from. The problem for me is I think there's a risk with this one that we continue lower, and the reason is those measured moves. So if I measure from the high to this low, project it from here, you can see that we got underneath this 61.8 level, and the equal measured move is down here lower underneath. So it's a little bit undecided for me, and so I really would like to see us above that daily 50 and ideally above 0.3 if this is going to bottom. Otherwise, I think that this could just end up being a corrective move. We could even, you know, having done 3 waves up, we could do something like 3 waves back and then 1 more, and then, you know, continue lower. So some of them look pretty tempting, but we really haven't quite reversed the trend yet, and this kind of toppiness here keeps me a little bit nervous. I keep watching charts like these because they have so much potential, but they're not quite there yet. There's so many that look kind of really interesting, but not quite over the hump, if you like. Now, for example, this is Polkadot. Here we are flirting above this daily 50 moving average. This would normally, if we can end the day and close above it, see much higher. Kind of, I feel like we're back testing this 61.8 fib level, but I'm not going to lean on that here. And if we do hold above this daily 50, we should at least come back to these swing highs and potentially back to the 200 moving average. So it's all very tempting out there at the moment. It's just kind of not quite there yet, if you know what I mean. And whilst, yeah, it is really good news that the tariffs may not be as awful as or as fierce as people are expecting, it doesn't mean that there aren't going to be any more upsets yet this week. Let's talk about a couple of more. Last week we were looking at Tau and Bittensor and Fartcoin. They were my favourite trades last week when I looked at this market. If we look at, this is Bittensor. Here we had a lovely swing, and this was clearly very corrective. The problem with this for me is it looks like one of those triangles, and wave 2 can't be a triangle, which means it's a B. So it might not be, this might be wave 1, but I'm being a little bit cautious. What I do know is that this next swing should have a relationship to this first swing, and we should continue higher if we can break out from these highs. So potentially we could be measuring from here, which means this is the 61.8 level. This is the most conservative. We can hold above 274, we continue to 298 and potentially beyond. And potentially we've completed this whole correction from this low here if we cannot get above 274. So we don't want to fall back underneath this 236 fib level, which would be 260. That's where you would be wrong to be bullish. We could also say, well, that's kind of a back tester here, and you know, underneath 260 then get out of the way. I think potentially this whole thing could be over. But otherwise, if we break to new highs, 298 next for Bittensor in this counter trend reversal chart. The other one we kind of really liked last week was Fartcoin. This is a daily chart of Fartcoin, and we said if we could get above and hold above this daily 50 moving average, we could see a really strong move. And we've seen a really nice strong move here. I think that buying pullbacks should be an opportunity. We are at a little bit of a support and resistance level if we look left here. Not quite there yet. If we look at these lows, but if we look at the tails, you know, these closing prices, potentially this is a little bit of a pause level. But for me, we flipped the trend. These daily 20 and 50 are about to see a bullish cross, so I'm looking for this one to continue higher. We might have a wobble here at 0.68, but I think 0.79 in Fartcoin should be where we first target in terms of fib retrace levels for me, and this 236 fib lines up with very nice support and resistance from this downtrend pullback. So this is one that I'm looking to buy pullbacks in. We had a really nice move yesterday, but three waves back in this Fartcoin, and this should, in fact, this might almost be done and setting up shortly here on the hourly. Be waiting for this to go green again and turn higher and looking for a breakout again. 0.68 and then 0.79 next for Fartcoin. Sometimes you see a bigger pullback if you can't make a new high. Remember, sometimes small three-wave corrections turn into bigger ones and then before you keep going, so we need to be a little bit patient. But at the moment, you know, everything feels pretty good, and that one worked pretty nicely across the board in the smaller meme coins. Even the ones that I like and look at, for example, Bert is a little one that I like, keeps trying to bottom. Whatever chart you're looking at, whenever you look at a double bottom or a retest like that, look at the, you know, from the last swing high that got you into it. This is going to be your first target, and then if you get above it, you will see a bigger move. Here on the daily, we've also got all our daily moving averages. Here, this one I like because it bounces really nicely. When you get a nice bounce in this one, you get like 100% move, you know, even in small counter trend moves. But you know, double bottom like this is always interesting. So if we break above these highs, we're going to look for the high of this double bottom range up here at 0.02 next in this one, Bitcoin. If we look at PopCat, we have very nice swing failure pattern hold of these lows on the weekly. If we look at it on the daily, very nice retest. Here we are, potentially at resistance to this daily 50 moving average. If we get above it, remember it's low in the middle, and then I think because we've got this swing failure double bottom, I think we get to 0.38 and the top of this kind of sideways range that we are starting to build up here. Perhaps 0.3 if we look at the closing on the weekly. It's not quite so impressive, but usually when you make a slightly lower low, you tend to come up here and make a slightly higher high when you see this pattern. So PopCat, quite interesting. Again, buy lower time pullbacks. Don't buy the highs if you can. Here, in fact, we may be breaking out from this very nice sideways consolidation for more upside in PopCat. And if we take a look at another request, let's talk about Fetch. This is another one that I have been eyeing up for some time because we are at one of those levels where from the highs that we made in March a year ago, we're at that measured move level down here at 0.478, looking to see if we can see a reversal. First target is going to be that 200 moving average in a week on the weekly, and if we can get above it, much higher. Let's see where we are then on the daily. Again, stuck previous high, not quite the reversal we have seen yet. But remember, in crypto, high tide kind of tends to float all of the boats. So something like this should see a move and a breakout from this resistance level, and above this daily 20 moving average. This resistance level here is at 0.534, the previous high. That's what we need to hold above for the reversal that we're kind of looking for. This daily 50 then, and this swing high becomes next at 0.65, and then that 0.65 of course is that weekly 200 moving average. So not quite there yet. Really good news this morning. I think if we get a little bit of a pullback, we could see a bigger squeeze higher as we head into month end, and we'll see how the tariff news holds up. Good luck. Let me know if there's anything